everybody, Brandon Griffin here, aka the Realty Resource, with yet another Rooster. This is my weekly segment where I tell you everything related to real estate, and let's get going. All right, so the real estate market is rebounding far better than we had actually even expected, and we're seeing that now in like showing traffic and what's going on with real estate. So while recovery might take a while, we might be seeing more of a swoosh recovery than that V shape that we were hoping for. We are already seeing some really positive effects in the marketplace. So there's a lot of pent-up demand while we put pause. We just basically press pause on the marketplace for the last month, and showings are catching back up. So we're doing better than we were doing from showing traffic perspective than even this time last year without COVID in place. Basically, what I think is going to wind up happening is because we did put the market on pause for a little bit and everyone kind of held off and waited, and there's some people that are still waiting, we're going to see the market, the seasonality that we normally see in our marketplace here in Colorado shifted. I talk a lot about this in my buyers class that I teach about the normal market seasonality. If you'd like to check that out, we'll put a link in. And specifically, I'm going to start doing a market in a minute. We'll do a market update every Monday in 1 minute or less. From the Mortgage Bankers Association, Q1 data is showing that we're having the lowest foreclosure rates of the last couple of decades. So I get asked a lot, especially right now, if there are going to be some crazy deals in real estate. And considering what I just said about, this pent-up demand and everything kind of coming back gangbusters, I don't really think there are going to be a lot of crazy deals in the foreclosure realm. A lot of people had a lot of equity, and especially with what the government's doing to soften the blow of the economic hardship that everyone's facing, especially homeowners and renters, it's worth watching delinquencies, because delinquencies are up, and that makes sense if people can't pay their mortgages. But I've been following this a lot too, so please check out my videos on forbearance, the liquidity crisis, and we'll keep monitoring everything and let you know. There's also still a really good article from the Wall Street Journal, just like that quick tip that I recorded, that talks a lot about this liquidity crisis, the big question mark in the marketplace. So I'll link to that in the description as well. So rent collection is down, but only slightly. Denver Business Journal was saying that 89% of people have paid their rent by May 5th. And that's versus about 93 to 94% on average. So there's not as many people requesting payment plans due because the unemployment benefits that the government has put in place through the CARES Act are actually paying people more than they were making at their job. This is something I've mentioned before. It's hard to get people to go back to work. There's an interaction now. We're seeing, instead of the crazy deals with the foreclosures that we might have seen in the Great Recession, we're actually seeing large residential rental companies' stock go up. So we're seeing a lot of people becoming landlords because they understand that the rental market is so strong. It might just be that your strategy is not to try to get out there and find a buy and flip, but instead, finding a good deal on a buy and hold, a reasonable deal that has a good, solid, and dependable return. And then finding great tenants to put in there with good jobs. All right, so for your investors as well, 1031 exchange timelines have been extended. And if you don't know what a 1031 exchange is, I will do a quick tip on that as well. But basically, it's a way to defer taxes if you are an investor and you own an income property. A great class for 1031 exchanges, if you are interested, or if you are an investor and you're thinking about that, is coming up. It's being put on by First American, and I'll link to that. Last but not least, refinancing. We're going to talk a lot about refinancing today. We'll do a quick tip on how to know when you should refinance, but there's a lot of folks that are using a refinance to bridge the gap right now, whether it be, bills that are building up, or if you can't make your mortgage payment, maybe you can change your mortgage payment and lower it. We have talked about forbearance options and then the end of forbearance, which might mean loan modification, but all of those have kind of a negative effect on different things, whether it be your ability to qualify later, whereas refinance that you choose right now proactively could be the best option, because you do have a lot of options. However, they are kind of going away as the banks are dealing with the liquidity crisis. So today, our live at lunch at 12:30, we'll talk to Mike Stone a little bit more about what kind of options we have to refinance, how to know when you should do a refinance, how to do it, and then specifically how to shop, because it can get really confusing. So please tune in for that, and then also please like, follow, subscribe if you want to get more of this information. We'll see you next Friday. Have a good one. Bye.